Hi guys! Many of you have been asking for a video to show a step-by-step method by which you can make the first trade in the stock market. So, stay with us to the end of this video and you will see how it would be possible to enter the world of stock market by following a few simple steps. This is the first part of this lecture. The first step is always learning. 99% of people who lose are those who are impatient and want to make quick money without trying to learn even the basics of the stock market. There are many ways you can learn the fundamentals of stock market investment, and most of those resources are free thanks to the internet. Even if you invest just a little in education, it will go a long way. How come you invest in 2 to 4 years in getting an MBA degree, for instance, so that you can get a particular job in your dream company? Your goal is probably to have a better career path or to get a job with a better compensation package. Well, you're in stock market to make money as well. How come you expect yourself to make money without even spending a little money or time in learning? There are multiple ways to learn about stock market investment. This include, but not limited to, online videos, books, pamphlets, etc., free market updates in our social media, free general videos, tips, group discussions, and one-to-one and group online and in-person classes. Nonetheless, there are still a few impatient people among us who simply ask for buy-sell alerts without having any intention to learn a few things about how stock market works. Even right now, I'm pretty sure a few of you are rushing to the next step. Well, if you're among those people, prepare to lose and don't say we did not tell you so. The second step is not buy or sell either. This step is sort of a mental preparedness and making a few decisions so that you can have the right start to make your first buy-sell in an informed manner. 3 things you need to determine. First, make sure you know your own risk tolerance. The concept of risk tolerance has been defined in our previous videos, but in this slide we will briefly explain it again. Essentially, you need to know how much you can lose without getting extremely upset or without having an unpleasant impact on your everyday life. For example, if you make $70,000 a year, this means you're left with $4,500 a month, more or less depending on the state you're in, of course. If your monthly saving as a result of this monthly income is $500, then perhaps losing $500 a month is not earth-shattering for you. On the other hand, if you lose $2,000 in a month, you probably won't have enough money left to pay the rent, which is a big deal. So, your monthly risk tolerance in this case is $500, not $2,000. Second, the second step is picking your investment strategy. Remember we defined 3 investment profile strategies in our previous videos? It started with low risk, low return, and moved to medium risk, medium return, and then ended with high risk, high return classification of investment. The details of such strategies are taught in the Market Newbie Silver and Gold packs, but for now, let's stick to the name of these strategies and infer for ourselves what they entail. For newbies, we strongly recommend low risk, low return trading strategy. 20% return annually is not a bad return that is promised in low risk, low return method. Just make a decision that you stay absolutely disciplined and loyal to the rules of your trading strategy. Making a decision and prepare yourself emotionally for at least 1 year adhering to the rules of this strategy and then go on to the next step. Step number 3. Making a target profit is also part of picking a trading strategy with one difference. Say you pick low risk, low return with 20% annual return. It is true that you determine the annual return of 20% in the strategy, but this number could disappoint you even if you achieve it, if you only invested $5,000 as your initial capital. Some of you might say, only $1,000 a year? Really? This is too little and it's not worth it. So, you want to make $10,000 annual return, you might want to start with $50,000 as your initial investment, so as to reach $10,000 annual return, given the guaranteed 20% return of low risk, low return method. Once you have made all these decisions, The next step is to pick a stockbroker. Stockbroker is like a liaison between you and the stock market. Basically, if you don't pick a stockbroker, you would have to go to the stock exchange yourself and place your sell-buy orders. Stockbrokers act as your agent and make all your purchases possible. In return, they charge you a certain fee of their choosing for the services they provide you with. This fee is called commission. Some banks provide brokerage services for their clients in addition to their usual banking services. For instance, TD Bank in Canada and the US, they have a separate division within the bank called TD Direct Investing Services, which is essentially a brokerage service. All you need to do is to find a credible brokerage and deposit money based on your determinations in the last step from your bank account to brokerage account that, by the way, belongs to you. Don't think that this is money out of your pocket and going to the broker's account. Broker opens up an account for you exactly like a typical bank does, and you will have full control over your account and money. When picking a stockbroker, pay attention to a few things, such as graphic user interface, the ability to trade on your cell phone, offering a good smartphone application, commission, the ability to access the US stock, customer service, ability to access Forex and CFD markets, and providing option trading features. The last two are relatively more advanced options or concepts and might not be a good interest to newbies at this point, but down the road you might want to get more skillful with other financial instruments and try other advanced high-risk options. You can choose between a multitude of brokers depending on the country you live in. For instance, in Australia, there are the following brokers: Consec, NabTrade, ANZ Share Investing. Consec has a good graphic user interface and has a good customer service, but charges more expensive commissions, especially for the US stocks. NabTrade is relatively cheaper, but might not be your first choice when it comes to customer service. Simply search these guys on Google, and you will find out more about their services and commissions. In the US, there are a multitude of brokerage, three of which are TD Ameritrade, Robinhood, and E-Trade. TD Ameritrade uses the famous Thinkorswim software, which is one of the best trading software packages in the world. Robinhood doesn't even charge any commission, which has attracted huge popularity among millennials. E-Trade also provides many features for dynamic trading. In Canada, TD Bank offers brokerage services through their TD Direct Investing branch, but their customer services and mobile app is not the best. In return, they are connected to TD Ameritrade, and they can offer Thinkorswim software to their clients. Questrade has one of the best customer service and charges very small commissions. Their app is still going through development. SureTrader contains very good features for day traders. Okay guys, this is the end of part 1. Don't forget to subscribe to our YouTube channel. It is right there on the bottom right corner of the screen. Check out our websites and our Facebook and Instagram channel as well. See you in part 2 for the rest of the lecture.